first decision point is, do you hire a banker or not? I called one of my friends, should I run a process or not? And he said, let me give you an example, John. He said, if you had a $10 million house at the beach and you wanted to sell it, would you put a for sale by owner sign up, or would you go hire the best real estate agent in that area? And I said, that makes a lot of sense.
John McGowan is the founder and CEO of HubSync. Founded in 2019, HubSync has experienced rapid growth, achieving 744% revenue expansion from 2020 to 2024. In May 2025, HubSync received a growth investment of more than $100 million from Thoma Bravo.
The amount of term sheets that you received is way above market. Did you think you'd have the outcome you achieved?
We ended up with a fantastic outcome. It exceeded expectations. Things just moved so quick.
What would you advise other founders who are on this initial leg of partnering with an institutional fund?
Hire a banker. Do what we did. It's not just about the check. You have to find the right partner that's a fit for your journey, what you need. You had a very, very structured and organized process that was proven and it was repeatable. We were impressed when we heard about how tight you've run your processes. You and Zach stayed involved throughout the entire process. We were thrilled with the choice with Kaizen Equity. You were absolutely the right partner for us.
You're listening to The Closing Call, the podcast where we dive into the journeys of founders as they navigate the highs, lows, and pivotal decisions that led to the defining moment that we call the closing call.
Well, John, great to see you again. I appreciate you joining us here today. I have to say, I missed the late night working sessions at the Harpeth in Franklin. It's been some time since, but I've heard all's been going quite well at HubSync since the transaction.
Yeah.
But just to get started, I would love for you to kind of introduce yourself. And HubSync's all-in-one platform is quite a unique story, given where it all began, and sort of the genesis of the idea has a lot to do with your background of having the exact same pain points as folks in the industry. So love to hear from you.
Awesome. Yeah, I'm glad to be here, and thanks for having me. It all started honestly in a small cube in Raleigh, North Carolina, when I was a staff person at KPMG, and started in tax. I have a master's in tax from North Carolina. You can see the Tar Heels behind me here. And I really just saw some of the pain points early on. It's just a typical founder story, Shane, right? You have a founder who sees a problem and wants to solve it. So kind of the itch around solving the pain points around tax preparation started when I was a staff person in Raleigh, North Carolina. And I'm kind of asking myself, why am I hand punching data into the tax software? So I was able early on, this was a long time ago, to figure out how to get data from my clients and actually get it directly into the software without me having to hand punch it. And the partners in my office were like, how are you getting these tax returns done so quickly? And I trained everybody else in the office on how to use technology to really cut into the time it would take to prepare a tax return. So that was kind of the genesis of me seeing like there's a real opportunity. And you fast forward even to today, and you still see people hand punching data into the software. So we're trying to solve some of that basic problem. But I moved in the Big Four out of tax into technology, and ultimately, I won't go through the whole story, but ultimately became the CIO of the tax practice at KPMG. So, as we've talked about during the process, the Big Four are spending now hundreds of millions of dollars on technology. I had a massive P&L of, about $60 million and over 500 developers. So the Big Four are spending a lot of money to build platforms like HubSync. But as I walked into the role at KPMG as a CIO, I was really a business-focused CIO. And I kind of saw the same problem inside the Big Four that we see in the industry now. Just a lot of point solutions. We had like 60 different applications with different look and feels, different architectures. Our clients were having to log into a lot of different applications that we were building. So I kind of looked at this and said, why aren't we building off of one platform with one common client experience, with one architecture? I got some pushback internally at KPMG on that platform strategy, but we executed it. That was really the first version of HubSync inside of KPMG. So consolidated all these applications, got to a single client experience, common architecture, which allowed us to build with new applications and new capabilities more quickly by having a common architecture. Fast forward, I moved to Deloitte for about 5 years, got a good perspective on the largest firm inside the industry. And I really just always had this itch to go create HubSync. I built kind of a second version of HubSync inside of Deloitte. It started that journey. Now all the Big Four have these larger platforms, but really just saw the opportunity to take what I was able to build with the large budgets and teams I had inside the Big Four and bring it out to the market. So the firms, 5 through 200 could get access to this modern technology. And as I would speak at conferences and show some of the capabilities inside these platforms, I'd have people walking up to me saying, why can't we get access to this technology? So had this hypothesis that, the 5 through 200 type of firms really would want access to this. And so I left Deloitte in mid 18, we'll talk about how I bootstrapped the business with some consulting. All of those consulting clients became HubSync clients, and just was able to build out module by module over a period of a couple of years, kind of the same capability that I was able to build in the Big Four. So exciting story, is a lot of fun. We're still growing, we're still improving and building on the platform, but the hypothesis has proved true, as you know.
We consistently heard from the market that John is a thought partner with us. Everything that we say that we're experiencing in each tax season, where our next pain point is, John is there to help us on that front.
Yep.
And then develop in that direction in an extremely quick and efficient manner. So it was thrilling for us to work together and just hear that from the market, and showed up in your retention amongst your customer base. You have the market leading retention in this space particularly. And that was quite exciting. As you know, a lot of investors could get behind backing a business like that. But if you fast forward to kind of Q4 of 2023, you just wrapped up 106% growth year. So you must have just been thrilled at that stage. What was next for HubSync on the roadmap?
At that point, we had really gotten to the stage where the original vision of the engagement letter all the way through to the delivery of a deliverable to a client had been built. We were there. We wanted to continue to enhance and improve each of the modules around what we call our wheel, our website. But we had really finally finished, all of the modules that I'd envisioned when I started building this. And we had just signed up another top 25 all platform client in Q4 of 23. So we were really starting, a Baker Tilly was one of our early anchor clients that really partnered with us and continued to license each module as we brought them online. But we really started to see this momentum of other firms saying, hey, I really want to shut down all of these point solutions. So we got another top 25 firm in Q4 sign up for an entire platform deal. And we just really started to believe that this hypothesis that we had as I left Deloitte was coming to life in a big way. So we had this strategy of let's continue to enhance all the existing modules. As you know, our engagement letter module has been kind of a really tip of the spear offering that's been a huge pain point in this industry. As people ask me questions, what would you have done differently? My first answer is always, I would have built engagement letter first, not last. We talked about that during the process.
Sure.
But the strategy coming out of 23 into 24 is, we recognized the opportunity, and we realized that we needed to take more capital in to grow the company. That I've been very lean and bootstrapped in terms of how I've grown this company, but we realized we wanted to do the Series A process. And we'll talk about, the next move to do a Series B. But we recognize that to really scale and grow HubSync, we needed to take in some outside capital at that point.
Yeah, and I would say it was probably pretty obvious because you were being swarmed by investors left and right. As we got to know each other, I was just taking a ticket in line to try to get your attention, which was great. But obviously made our lives easy as we partnered together to see how much interest was around the business. But as the prettiest girl at the dance, like what made you think, why not just go one-to-one with one of these parties? What was going through your mind in terms of how you would run the process of selecting the right partner for you?
Well, as you know, there was a lot of inbound traffic, and running a process like this can really, for a CEO, almost turn into a full-time job. And we'll talk about, that's one of the reasons why we hired you. But one of the things I did do is I got to know a lot of the investors. I spent time, dinners, lunches. You saw my tracking list of all the inbound traffic that was coming in. For me, it wasn't just about getting a check from an investor. It was finding the right partner that's going to provide operating assistance to HubSync, help me continue to build out my executive team, scale and grow the company to 50 million and beyond, and finding that right partner. So, I did a lot of dating and a lot of, pre-work before we ran the Series B process, which was really, really helpful. And, you have a lot of these investors, Shane, as you know, that want to get in before a process, right? And they're like, don't hire a banker, work with us. And I talked to a lot of those early on. But, I never shared any financial information. They were always asking for financial information. But I got to know a lot of the investors that ended up being in the Series B, which was helpful, and I think it accelerated our process. But I also learned, some of the early early investors that try to get in before a process and maybe try to make an investment and a valuation that is really under where we should be. And I think that was a great learning process for me. And once we brought you on board, it was helpful to kind of validate that a lot of the early decisions I made pre-Series B were the right ones, and that when we got into the Series B, the ones that were a fit for the process, I'd already gotten to know a lot of them, which was very helpful, as you know.
And it was fun. We spent, and I know you had a very busy schedule. We spent 10 days in Franklin together, just flushing out all the right fits.
You wore me out, man. You wore me out big time.
Yeah.
I mean, I looked at that week when I woke up, and I had 4 hours in the morning, 4 hours in the afternoon, each with different investors. I had coffee meetings in the morning. I had dinners at night. And, I joked around with Ross. We just did a podcast, and Thoma Bravo was actually the last one, as you recall, on a Friday afternoon. So Ross said, I hated to see that slot that I was last. And I was pretty exhausted at the end of that week, but it was really, actually, it was a fun week to talk to all the different investors. It was honestly gratifying and fantastic, because all the market research that they did on HubSync, and to see some of those slides go up where our clients are saying HubSync's a partner, they're not a vendor. And the one I loved was, we like the technology is great, but we really love the people at HubSync. They're really our partners. They really work with us. So there was just a lot of, great market feedback that was gratifying. And, I shared it all with my team. As they were thrilled to see the feedback. But the investors, as I mean, they really dig in and they do due diligence. And my clients were like, who are these people that are calling me all the time asking about HubSync? But they really want to make sure, given the bet that they're making, that they're investing in the right company, the right founder. And we had a great set of meetings that week, but it was definitely exhausting.
Well, we were glad HubSync held up quite well in diligence. So you made a lot of phenomenal choices leading up to the process. And I know the demonstrable ROI that you provide your customers, and being able to split out, by module, how much folks are saving on a one unified single pane of glass experience. That really resonated with many of the investors that competed toward the very end. But just backing up a little bit, I know we were not the only party at the table to kind of win your favor as you were evaluating advisors to run your process. Like what was important to you? What criteria did you lean on? I'd love to hear your thoughts there.
Well, one is, first decision point is, do you hire a banker? Now, we talked about that a little bit. As we had some board members that didn't want to run a process. And I called one of my friends who's really tight friend of mine, and he said, should I run a process or not? And he said, let me give you an example, John. He said, if you had a $10 million house at the beach and you wanted to sell it, he said, would you put a for sale by owner sign up, or would you go hire the best real estate agent in that area? And I said, that makes a lot of sense. So that was the first discussion point, is do we hire a banker or not? We decided that we were going to hire a banker, and I got my board on board with that, as And then really, I wanted to make sure we ran a really thorough process and evaluated. As I think we had about 7 different investment bankers that approached us. We got it down to 3. You were obviously one of them. And we had each of the investment banks present to the board in a really comprehensive way. And there were 3 great investment banks, as that were there at the end. We can talk about why we chose you and why your team shined. But we were thrilled that we ran a very formal process. It was the right way to go. We gave every bank a chance to win the work, and you won it. And I think we'll get into why you won it. I think one of the things that the board felt was important was that this is going to take up a lot of my time, right? And which bank was going to really accelerate the process, put together the best package in the shortest period of time. And we wanted this process to be as condensed as possible for me and for the company, because you hate to say a Series B is a distraction, but you're trying to continue to grow the business. And the board was concerned, like, we can't have John offline for an entire quarter running a process. So what impressed us about your pitch was the speed at which you were putting materials together, which you did. You had a very, very structured and organized process that was proven and it was repeatable. And I think, the other thing that we heard is exclusivity, right? You don't want to be sitting in exclusivity for 30 or 45 days. And we were impressed when we heard about how tight you've run your processes and that you've kept the exclusivity period fairly limited. So those are a lot of the reasons why we chose you. But, we were really happy with the way we ran the process. I would highly recommend to any founder, to make sure you're evaluating different banks. And if you have a board, put them in front of the board and have the board evaluate which one is the best fit for the process. And we were thrilled with the choice with Kaizen Equity. You're absolutely the right partner for us.
Yeah, I appreciate that, John. I remember the team saying, you want us to get this ready in 2 weeks? And I know we hit that timeline of 2 weeks, but we were going through all the streams of diligence in a pretty expedited manner. So a few long weekends, but at the same time, I think everyone was happy that we had that package ready to go, so that when the time came, we had some really good partners across the board that were at the very end and ultimately allowed you to kind of make a decision with a very high probability chance that any one of those partners would close
Yeah,
immediately.
we had some great options, as you know, and it
Yeah.
was. I mean, we made a great choice in Thoma Bravo, but we had some other finalists that that were also phenomenal. So it was a tough
Agreed.
decision. But we feel like we made the right one.
Now, when you would think about, just kind of post transaction and having been through the process, what did you feel like are things that you really enjoyed about the process? What were some of the challenges? I'd love to just unpack that a little bit too.
Well, I like that the process was fairly tight, right? I mean, I think we sent out the teaser to like 40 investors. And again, this gets back to some of the due diligence I had done earlier. I think we had identified the right group of investors that would be a fit. So you didn't send this out to 200, you sent it out to 40. I mean, I think the response rate was phenomenal. I can't remember, Shane, what was it? 20, 23 responses?
2023 turn sheets. Yeah.
Yeah, it came back. And then I think what you and I did was we kind of tranched the initial valuations. And it was interesting. We had a lower tier, a middle tier, and an upper tier, right? And we had the upper tier was great. It was interesting that Tomo came in, I think, initially at the lower tier, right?
Sure.
And I give Ross a hard time about that all the time. But they quickly wised up and realized that they needed to get to the upper tier. But I think it just you ran a really tight process from the beginning. We got to a set of investors that we felt were great. And then once we got through to that upper tier, we had that meetings that we talked about for a week, for 5 days. We brought, I think, seven investors in that week.
Yep.
And then from there, and we'll talk about what happened after that. But from there, it went really, really fast. Like the gas pedal went down at an accelerated rate, and we moved really fast with the investors that got to that final tranche.
What did you think of just generally commercial diligence? All the questions around accounting and technology, and what did you feel like that was something? We felt as a business, given we work with a number of clients, you guys were quite prepared, and it was great that you had already some leaders in different areas where you could rely on their leadership. But I know you joined a few of those meetings. What did you think of the commercial diligence process? Yeah.
You know me, I enjoy the technology discussions. I was like, bring it on, come on, bring it on. And all the tech diligence, they were thrilled with what they saw. And that I have an amazing engineering team, as you know, and we just checked all the boxes on architecture, security, scalability. As you know, we're built in AWS. They were really, really impressed with our automation on our infrastructure, automation on our software development processes. We release every 2 weeks to our clients to production, which is phenomenal. So, the tech diligence was great. We crushed those. I think you got also great feedback on financial diligence. I mean, our books were in order, our deferred revenue, and one of the investors said, I've never seen, deferred revenue tied to the dollar. So really it was just, it really showed how operationally efficient and structured we were. And, we didn't really have a lot of challenges to the diligence process.
Yeah.
I feel like, it was a lot of check the boxes on finance, technology. The feedback from clients was phenomenal. So it really just validated to me, Shane, just all the hard work that we put in to get to this point. And we had an amazing company and asset that these investors were interested in. As you know, as you told me, you kind of start to see who's most interested by the amount of money they're spending on diligence. We can maybe talk a little bit about that. So you started to see the investors that were spending a lot more money on diligence and accelerating their evaluation of HubSync. And those were the ones, as we found out at the end, that ended up at the top in terms of finalists. And you see the others that were not spending the money or not, doing as much on diligence. And, the ones that did were the ones that were in the final seat.
Yeah, that level of commitment's important, as they have to get through it anyways to call it capital and get behind the deal. But I think it also helped us as a team understand, who understood the market extremely well, who could be a partner post-transaction and not just a capital provider. So
Yep.
I'm glad that we were able to run the process that way. And the team and your end was so well positioned and buttoned up that we could run the process that way. Because with many bootstrap companies, there's quite a bit of work to do ahead of time. And so I'm glad we were able to prep in 2 weeks, get out to market, and still get through commercial diligence. That's just a testament to how prepared you were as a team, even though you were, lightly capitalized, and largely it was, you steering the ship. So it's impressive.
And one thing that was interesting as well, Shane. I mean, I learned a lot through the I mean, there were some takes on HubSync from the investors that were interesting, and you had investors with different perspectives. We had one investor that saw HubSync being a $100 million ARR company if we just focused on the top 100 CPA firms, and others that felt we should be moving down market, and we talked geographic expansion and everything else. So there was a lot of interesting feedback on how to scale and grow HubSync. So that was great for me and Paul and the leadership team to kind of just hear different perspectives from outsiders on how HubSync could scale and grow. It was really educational, and as we had a lot of great bi-directional discussions in those meetings in Franklin with investors, and
Yeah.
a lot of exciting feedback, and we've actually implemented some of the feedback that we got from the investment community.
Yeah, that's fantastic to hear. Nice. I mean, speaking of which, just now that we're at the end of the transaction, I'd love to hear, what's next for HubSync? What's on the roadmap, and, what have you implemented maybe that you've learned from the transaction?
Well, the first thing we did, Thoma Bravo is great at scaling SaaS companies. And so, you got organic and inorganic, and, looking at potential acquisitions. So we've already done an acquisition of an e-sign vendor. That was one thing I felt strongly about, is getting an e-sign capability native to HubSync. So we executed on that, shortly after the transaction, and we're now building in HubSync an e-sign capability that we're really excited about, and our clients are really excited about. We continue to mature everything that we built. I actually just did a design session with my customer advisory board yesterday on improving our organizer, and got great feedback there. Obviously, AI is the talk right now, right? And we're doing a lot with AI. If you look at our roadmap for next year and what we're bringing to the market, we have document management. We've got our web-based work papers. We're integrating payments where taxpayers can pay their CPA firm through HubSync. And we're doing a ton with AI around intelligent document processing and autonomous agents and agentic workflows inside of HubSync. We just had two of our clients in for AI summits, and they walked out just blown away by what they were seeing. So, I mean, there's just no shortage of opportunity in this industry to continue to bring value and continue to build off the platform while we continue to enhance, the modules that we've had now for several years. I mean, it's hard to believe, but people ask us, like, how many busy seasons have you been through? And it's like 4 busy seasons now with our organizer and other things. So yeah, we've learned a lot through those experiences with the large firms. We're now seeing a great motion. We're moving down market, and a lot of the firms, in 100 to 200 are buying the platform, the entire platform as well. And, we continue to see this motion that the industry wants a single pane of glass. They want to automate as much as they can. They don't want people hand punching data like I did, so there's a talent shortage in the industry as well. So as people come into the industry now, they're not going to do what I did, and they expect a modern experience. So, I think the industry is seeing that HubSync's providing that modern experience for the firm professional and making their lives easier. And what we're consistently hearing more and more as well is the client wants they want a modern Amazon experience. It's part of what we heard during the Series B process. One of the investors came in and said, I'm working with a top 25 firm, and I had to log into 3 different applications to do my tax return with that firm. Why am I having to do that? So it was also interesting to get feedback from some of the Series B investors on their experience with their CPA firm and their expectation that they should have something like HubSync and not have to navigate across multiple applications.
It was very clear that you were an early mover in, modern AI native feature sets, but then also consolidating a number of the workflows that the head of tax, the head of audit, CAS, has to experience within client experience, but all through one single pane of glass. And that became quite clear to a number of the investors that were meeting with you, because even as they were thinking about, preparing for their busy season, they were thinking about all those point solutions that they're going to have to engage with as part of that effort.
The other thing that they were excited about too is, there was the thesis. Obviously, I started as a tax CIO, and our focus has really been tax to begin with. But I think some of them were a little surprised to see, the penetration that we were starting to see on the audit side too. And now we have a couple audit only clients that have used HubSync too. So I think some of the lights went off when they saw the opportunity to move HubSync and the platform from tax across the different divisions in a CPA firm. And I think they were, really encouraged to see that motion happening and the opportunity to even scale and grow further outside of just tax.
And as you think now of where you've been so far on the journey and where you're going, I'd love to hear, like, what are you most proud of so far and most excited for in the future?
I think I was, like I said earlier, I was just so proud when I just saw the feedback from our clients, and just anonymous feedback as they talk to our clients. And really, it's I love building product, as you know. I know I'm passionate about it. I'm still very involved in engineering, but I just love having workshop. I mentioned these AI workshops. I mean, we just love going out and meeting with our clients and having these workshops and sessions with them. We're constantly out meeting with clients. And so, Paul and I started this very early on, and we always really wanted to be a partner. And I know that, sounds kind of cliche and stuff, but it's true. We didn't want to be a vendor. We really wanted to be a partner. And so I think that really came through loud and clear about how we were helping these firms transform, that we're a partner. We're not just a technology vendor, but we're a partner. We have, as you know, a lot of people on our roster that came from the industry that know the pain points that our clients are experiencing. So that was probably the biggest piece of feedback that I got from the Series B, was that our clients really did view us as a partner. And we didn't have the customer advisory board in place pre-Series B. Not something that we put in place. So we had all of our clients come into town, into Franklin, in June, and just had an amazing session with them. And
So
now we
cool.
continue every month to have these innovation sessions with our clients. We had one just this week. And so, we're just working so closely with our clients, and we obviously want the family of clients and logos to grow inside of HubSync. But it's really what I always set out to do. I mean, when I heard these people walking up to me at these conferences, talking about the pain points and how hard it was to do their jobs, I wanted to solve that. And it's gratifying to really see the platform addressing a lot of the pain points in the industry now.
Couldn't agree more. It became very apparent when we were seeing all the customer feedback that investors were getting from the market. And it really translated into the outcome of the process as well. The amount of term sheets that you received is way above market. The amount of interest that you're able to generate all the way through the end through commercial diligence. And then ultimately, the outcome of the investment itself was quite exciting. Obviously, a great press release and rivaled, if not the best, one of the best transactions achieved in this market. I'm curious, on the early onset of the process, did you think you'd have the outcome you achieved, or how did that change in your mind from what you expected to what actually occurred?
It exceeded expectations. I mean, we'll talk about what ended up happening, right? We have to talk about that crazy weekend, but
Yeah.
it exceeded expectations. I mean, the initial valuations came in, really above expectations. I think we agreed on that. I mean, and then things just moved so quickly. I mean, you said you'd never seen anything like it. So we had a dinner with, it's funny, I was actually at the restaurant in the same booth for lunch yesterday that I had dinner with Thoma Bravo, and I sat across the street from our office with Tomo, and they had such conviction on the business and what we were doing to transform and disrupt this industry. And Ross sat across from me at that booth, and he said, this is a Thursday night, and he said, we want this deal, we want to close it by Monday. And I was like, I had a dinner meeting with another investor on Friday night. We had calls on Saturday and Sunday. And he wanted me to go exclusive over the weekend. And I said, well, I can't do that because I have other meetings. I think he didn't want you bidding this up and things, but it was insane what happened. I mean, we worked on the deal throughout the entire weekend. And I was on a plane, I think on Monday night, flying to New York to meet with a bunch of our clients. And I was signing DocuSigns on Monday night on the plane.
Yeah.
So I mean, I know you told me that you'd sort of never seen anything like that to date.
Nothing like it. Great conviction. I mean, Ross and the Thoma Bravo team did their part by getting to conviction and ready to fund the deal in such a short order. It was pretty impressive. But I do remember we spoke together and we said, look, we either got to give Ross our word or continue on with the process, and felt like we had made the decision to give him our word. So.
Well, I told him, I said, look,
Yeah.
this is the first, if we're, as you talked to me about during the process, this is a marriage and you're not getting divorced. And so I told Ross, I said, look, this is the first step of trust, and I'm giving you my word that, we're not going to bid this up, but I can't go exclusive with you because I need to have other conversations over the weekend. And I kept my word, you kept your word, and
Yep.
we ended up with a fantastic outcome. So
We signed what we shook on, which is great.
exactly.
Well, one last question for you before I let you go here. As someone who's been through this type of process before and now on the second leg of the journey, hopefully multiple legs to growing toward 100 mil of ARR, right? What would you advise other founders who are on this, initial leg of partnering with an institutional fund? What's your advice?
Definitely get to know investors, and it's really, as we talked about, it's not just about the check. You have to find the right partner that's a fit for your journey, what you need, and we found that in Thoma Bravo. So you definitely do the homework before the process. You're going to get a lot of interest if you've got a great asset that's growing. Take those meetings, have lunches, have dinners like I did. I mean, it's a time commitment, but the dating process, as I describe it, is really, really important. It was interesting that Thoma was one that I didn't date before the process, but there were a lot of investors that I had talked to quite a bit, as you know, Shane. So do your due diligence on them. I mean, you're evaluating them as much as they're evaluating you. And ultimately, if you've got a great platform, product, company, you're gonna have the upper hand in terms of having the conversation about valuation and what you expect from them as a partner. So definitely do your due diligence. We talked about this already. Hire a banker. I mean, do what we did. I think your company is phenomenal. I would recommend you to anybody, and I do referrals all the time. But I would encourage, a founder to do a process like we did. You probably don't want to hear this, Shane, but talk to several banks and, put them in front of your board if you've got one, or make them pitch and present to you, and make sure that they're the right culture fit for you. And you were, I mean, the thing that was Paul talked about, I mean, we could pick up the bat phone at 11 o'clock on a Saturday night and you were there. And the other thing I think is I would caution what I heard from other people as I talked and did interviews and references, sometimes the person you're talking to at the bank will quickly disappear after the process, and you're going to get some junior associate that you're working. We did not see that with you and Zach. I mean, you and Zach stayed involved throughout the entire process. So I would caution people that during some of the interviews I had with founder CEOs, they sort of cautioned me that, the investment banking leadership team was not as involved in the deal as they would have liked, but we didn't see that with you.
Yeah.
So no, that's some of the advice I would give a founder. Kind of simple, straightforward, but I think we, in my case, I kind of followed my gut. I was getting a lot of different advice from lots of different people. Don't hire a banker, hire a banker. I just kind of followed my gut and intuition, and it worked out great.
We are very glad you did, and grateful for the experience working together. I know we're lifelong friends now, which is excellent, and excited to be in Deer Valley with you. And maybe Florida someday. I don't know. So
we'll see. Still working on that. But yeah, no, I think it's, we've stayed partners after, and we stayed in touch. And I think it's not, I'm all about relationships. You're probably getting that vibe about, our relationships with our clients. And so, I also want to make sure I was picking a partner that was going to be someone that I could continue to have a relationship post-transaction. And it's been great that we've been able to continue that.
Well, thank you, John. I appreciate it.